Welcome back to the Easy Button Investor Podcast. I am one of your hosts, Colbert Johnson. We have Tucker Marahu, who's been trying to get me to call myself the host and him the co-host, but I'm not doing it yet. So today, guys, we have an awesome episode for you guys talking about what I think. I'm going to treat this episode a little more like an interview podcast than I am a back and forth, just because as we've built out our products for our clients, I think Tucker has a really good brain on this stuff and understanding your market and maximizing deals. He's done all types of deals. I've primarily done wholesales. I've been partnered on a few flips. All I did was really bring the deal to the table. So he's done, development, flips, anything, you name it. And I think it's going to be an awesome episode helping you guys understand how you maximize deals, how you get the most out of your marketing dollars, how you really understand your market and where people tend to go wrong and right. So without further ado, Tucker, welcome back for another episode. I'm excited for this framework, I guess, we're painting today of what a professional investor does in their market to understand it, to build the relationships, and to actually build a business that maximizes deals.
Yeah, it's an important topic. I'm glad to be back. I'll be the co-host for now, anyway. Whether or not you're a host or not, we'll see if you take that honor. We've talked about this before a little bit, but there's pond skimmers and then there's professionals, right? And so I think this topic kind of aligns with that, which is, if you're a professional and you take your real estate investing business serious, you're also going to really try and do everything you can to learn your market inside out backwards, right? And that's there's just a lot of hidden value, to the layman looking at a real estate market because they just can't see it. Whereas as you become more of a professional, it's like, you kind of look at remember those pictures, what was that movie, Mallrats or whatever, where they stare at the picture on the wall and the guy walks up, he goes, "Oh, it's a dinghy." He goes, "What?" He thinks it's a forest or something. So it's like the picture within the picture, right?
Was that in black and white film or color?
Mallrats, come on. That dude, he's like, that damn kid's still on the escalator. Remember that? Some of our listeners had to have seen Mallrats. Anyway, that's kind of what it's like, right? At a certain level, when you become comfortable enough and you kind of submerge yourself in real estate for long enough and you do enough projects and you kind of get in front of enough projects, you start to see, the value that other people don't see or the opportunities that other people don't see. So I think that's, we're going to focus on kind of different aspects of that for the show.
Yeah. I think when I think back on this, when we were just doing volume wholesale deals, you would go to certain cities or parts of town where you could get a deal way under market value and no one would touch it. And we had no idea why. Later, we found out from getting to know people who actually knew the market that in certain areas, permitting was harder. Every project got red tagged in that area. And there's a guy who actually was a client of ours for a while who was in my inner circle group about a year ago. And he was kind of a newer flipper in Seattle. And he I'd say had to go back to zero because of the fact that he was buying any part of town without diving deep into the zoning, the laws, the regulation, the who's who of that part of town. And he got red tagged on 2 properties in a row and had to sit there for 6 months. And that destroyed him because your hard money lender still wants their money. And I've seen that happen so many times in this business, even my shorter career, of someone who doesn't understand the market that they're in and they buy deals to buy deals. And they get them, eventually they go bust or have to start over. And I think the ultimate picture we're trying to paint on the Easy Button Investor show for you guys is how and what professional investors think when they think through a deal, when they think through an opportunity. Because the guys that I know that are legit professionals, I bring them a deal and it could be the best deal ever. But if it does not fit their buy box in their part of town, they are not just doing that deal to make money. And I think hustlers will do any deal they can do to make money. And professionals, when they paint their buy box, they stick to it.
Yeah, I mean, I think that's definitely true. I mean, it's kind of just goes back to like, if you're chasing value, right, you'll chase it anywhere. And some business models align perfectly for that, right? If you're doing a large amount of wholesaling, you can chase value and you can do your marketing such that, all you're really looking for is value. And then depending on where that deal is or what that deal is, then you can funnel it to the right potential, buyer. But once you or your business kind of becomes either elevates or becomes different than just a general, wholesale type business where you're just looking for value or large scale rehab business or buy sell business, whatever it is. Large scale rehab businesses scare me these days because it's just so much friction and headache. But once you climb that ladder and you kind of grow a little bit, you say, okay, what deals, number one, align best with my business, the way the business is set up. And number two is, what parts of town like yield the best returns, right? What's the easiest to sell? Which houses get broken into the least? Which ones are not, the least painful in terms of permitting and dealing with inspectors and cities and municipalities? And, at the end of the day, how many people actually want to buy a retail ready product in that neighborhood? And so you kind of look at all these different things. Oh, in addition to where I always call it the value line. The value lines are always shifting in different markets, right? Depending on what kind of redevelopment is going on. You can call it gentrification, you can call it redevelopment, whatever you want to call it. But it's an area that was worse that's getting better for a variety of reasons. Could have been a shitty neighborhood and now, it's cleaning up and it's getting nicer. Or it could have been an area that didn't have a lot of commercial services and shopping and restaurants and things like that. And they put in, a bunch of new commercial complexes that then provide those services there. And then it becomes much more desirable for that reason. Or they get a new school put in or whatever. Maybe Starbucks is around the corner. I don't know. There's all kinds of reasons. Whole Foods, stuff like that. People said they used to follow that around. So knowing those things, you can kind of see these shifts in your market. And, I think you have to be in real estate long enough to understand, what changes value, which ultimately changes desirability, right? Or desirability changes value. And so, when you first get into it, you're just thinking, okay, what's the cheapest, shittiest house I can find for less than I can sell it for, right? So that's why most people start in the hood, which it's not a knock, because we started marketing in the hood and looking at cheap houses in the hood too. And then, quickly came to the realization that why do we want to buy shitty houses in a shitty area, just to have so much friction the whole way through. And then hope to God we can find somebody that buys this nice turnkey product on the other end that's okay living in that shitty area, right? Which there are people that do it, but it just seemed like kind of a flawed business model to me. And so eventually we exited that. Yeah. So I don't know, maybe you had some prodding questions we can kind of pin down here, but that was a general overview.
I think the thought exercise that I wanted to go into was when you moved from Portland to Naples and started over, I know because we had chatted, the other place you were thinking of moving was Paradise Valley, Arizona, that area, right? And I think a good exercise for people listening here, let's say you would have moved to Paradise Valley instead of Naples. When you touch ground there, what are you looking to build in terms of infrastructure, partnerships, relationships, marketing, to feel like that market and you're confident in buying a deal where you're gonna build a house, or do a luxury flip or whatever it may be? What are you looking to have set up to really feel comfortable that the area, that the players, how to get things done when you go into a brand new place like that?
Well, maybe I'll pivot and talk about what I did here in Naples, because I would have done the same thing there, but I don't know who I would have met, right? Because it's hypothetical, but I didn't have an exact cookbook of I got to do this, I got to do that, I got to do this. But the one thing that I did do is I just started, I started marketing direct sellers. I identified, let me back up. I identified a couple of areas that I knew were close to the ocean, that rented really well. And at the time that I moved here, they also sold really well. And they weren't exceptionally expensive in comparison to some of the stuff here, right? We're not talking, 15, 20, $30 million in product new construction, a single family new construction prices. We were talking $1.5 million to $2 million generally. That's what the end new construction product was going for in those areas. And so, I identified a few of those areas. I actually came here. I stayed in one of them, one of the times I was here. But beyond that, after staying in it and kind of driving through it, riding bikes through it, when we came back here, we started marketing to it a lot. And I just spent a lot of time in those neighborhoods trying to figure them out, right? And it's still, to this date, I think I'm now finally starting to figure them out. I mean, we're 3.5 years later. It takes time. You can't do this overnight, especially in a market like Naples. It's so dynamic. But number one is I tried to figure out the neighborhoods. Where do I want to be? What is it like to acquire stuff? What kind of a competition are you going to face trying to acquire stuff with value built in? How easy or difficult is it going to be to sell it on the other end? And then there was a lot of relationship building that I did too, right? There was a builder here that I met, I just kind of tried to download everything out of his head that I could. And he didn't have everything to share with me, but he had a lot of things that I didn't have, right?
Well, and is that, I think to pause there for a second. When you met this, how did you meet this guy? When you find a guy like that, how are you approaching him to build that relationship instead of just hey, can we get coffee? Let me pick your brain about building in the area. Like, right, what is that intro like? Because a lot of people, that's one of their biggest issues is they know they should be going to someone to learn from them that's doing deals, but they have issues like making that intro and relationship.
I think, well, it's a funny story. That and another relationship really happened because I was doing direct seller marketing. And so you just talk to a lot of people, right? And so he happened to be buddies with a guy who lived in Baltimore that owned 2 lots in this neighborhood that were vacant lots. And the guy was thinking about selling them. He got my marketing piece, called me, and then we talked a little bit. And then he brought his builder buddy in just to kind of sniff me out and make sure that I wasn't just completely full of shit, right? And we just hit it off because obviously I wasn't. I was legitimately interested in buying his lots. And so because of that, it kind of solidified our relationship because I wasn't just somebody said, hey, do you want to go have coffee or whatever? And fortunately, the guy was nice enough. I actually bought him a nice gift certificate to one of the nicer restaurants here because I peppered him with so many questions throughout like the process. I almost felt bad, but he was always like, no big deal. But then there was another guy that I met, one of the higher producing realtors in town, younger guy. He's in between your age and mine. And which is, to find those kind of like higher producing people that are younger that kind of know how to interact and just kind of, he came down here a number of years before me and now he had the lay of the land. I sent out another marketing piece to a guy, a rich dude that he lists a bunch of stuff for. This guy had bought like a little school, like a kinder care type operation, right? That was also in the same neighborhood and it was an abandoned building at this point. And I was like, oh, that would be great for our office. So I looked up who owned it, had to go through a few layers of LLCs and members and all that stuff. And then I finally found where the guy lives, sent him one of my marketing pieces. And instead of him calling me back, he put his, hustler realtor on it to kind of sniff me out and see if I was completely full of shit or not. And, to this day now we've done, a handful of deals with this guy and he's a cool dude. So, you just kind of do things. I think a lot of people get hung up on like, how am I going to meet people? It's like, if you just got to take action like marketing and trying to talk to people that own property, a lot of this will just kind of happen on its own, right? Or you'll meet somebody that then knows somebody. It's not like there's always that like direct link that you plan on. It's just kind of the more action you take, it's kind of the luckier you get, right? In terms of, not only deals, but also relationships. So that was really the big kind of conduit in terms of like meeting some of these players here that could kind of shed some light on what it is that I should and shouldn't be doing, or, what areas are my thoughts on these areas, their thoughts, right? Or was I, misguided based on how I tried to read it? So combination of just spending a lot of time in these areas. Obviously once you start doing projects in areas, you really learn it because now you got money on the line and, you're in them every single day. But it's kind of a culmination of stuff, but that's how I kind of got started here. But the baseline of that, having the ability and the confidence to do that is because I had done it so many times, not only in Portland, but, in the previous coaching programs that I'd run, I'd looked at other people's markets with them and trying to figure out, they were like, I want to do deals here. I want to do deals there. And I'd be like, okay, well, explain to me what you think the market is. And then we'd look at it on Redfin and I'd kind of look at values and flips and what had been happening. And I've been like, well, that might be a shitty area. That might be a good one. And so, I'd done that exercise probably, 100 times in 100 different markets on top of that. So it's just time in the chair, man. At the end of the day, that helps a lot too.
Yeah. I think one of the points you made there about one of the best pieces of advice I got early on in my career. I remember I was 19 sitting in a Keller Williams office and I'd sat open houses and called expired listings and nothing was really happening. Is someone pulled me aside and was like, man, if you just show up every single day and do something productive for your business for the next 10 years, something will happen. You'll meet someone because you're trying to do a deal, something will shake out. And to your guys' point, if you're out there listening, just sitting in Facebook groups, I call it mental masturbation where you sit in Facebook groups and you just talk about deals all day. Right. Like that doesn't get you anywhere and no one wants to grab a coffee with you. But if you're trying to do deals, you're actively marketing, you're in the game, you're putting effort in, someone will eventually notice that and you'll have a conversation that'll lead to a different path you couldn't even see for yourself. So I think that's really important when it comes to meeting people in your market. The second piece there that I think brought me back to a something I thought about was earlier on in our wholesale business, we were always kind of looking at competitive advantages. And we hired a sales guy at one point that was former military. And anytime he got on the phone with someone down by Joint Base Lewis McChordon, down in Tacoma area of Washington, it was an automatic sale because those military got a military guy and they love working together. There's a bunch of military landlords down there because they had bought properties with their VA loans, eventually started renting them out. They moved out of the area, but they kept the property they were living in while they were working for the military down there. And we were just ripping them. And so we directed a lot of marketing dollars down to Lacey, Olympia, Tacoma because of that. And that's one of the ways I think you guys can frame this conversation of knowing your market is know the best types of sellers that you work with and focus marketing dollars where you're going to get the highest ROI. And that's so we did that. We crushed it down there. We were doing a ton of deals in Lacey, Olympia, Tacoma, and even further south down with that whole, absentee landlord, former military guy avatar. There's a lot of them out there. That's one of the ways that we kind of maximized our market. But I think, Tucker, a question for you is you come across one of the last times I was in Naples and we were staying at one of your homes for our team retreat. You had a house that you had decided to flip and not tear down and build something new. And so if you were advising someone who is doing a couple wholesale deals, doing a couple flips of how to set up a shop in their market where they can eventually move upstream, do bigger flips, do bigger development deals, what do they need to know? Like, as we talk about a lot, people shouldn't go from 2 wholesale deals to developing a $3 million house. What is that progression, do you think, in their market? What do they have to learn about zoning, materials? And you don't have to go super in the weeds, but just generally speaking, if I came to you and I said, hey, I've done 3 flips in the $600,000 price point. If I want to work my way up to $1.5 million, $2 million, eventually building, what is your, thoughts and concepts around what that progression typically looks like as people learn about their market and grow?
I mean, I'll strip the dollar figures off it because every market's a little different, just so that everybody can kind of understand. Because it's all relative, right? Expensive somewhere is not otherwhere, vice versa. So, as you start wholesaling, like you're learning a few things that are super important. You're basically learning the baseline skill set that you need in order to be successful in real estate long term, right? Talk to people, talk to weird people, negotiate good deals, make them like you at the same time that you're buying with a lot of value. That's a tremendous skill set. But then you start buying these houses and you're flipping them to people, wholesaling them to people, and maybe you go to your buyer's list and first couple guys are like, man, it needs a whole new foundation or whatever, right? And you're like, oh shit, I guess I should look at that next time. Or, this house only has 1 bathroom and it's upstairs and there's no room to put one in on the main floor. Just weird stuff, right? That there's no playbook that, tests you on all this stuff. It's just, you kind of learn over time. And so, as you start wholesaling some of these to your rehabbers or your end buyers, they start to kind of redirect you a little bit. You kind of learn from there. And then eventually a lot of people, they become confident enough. They're like, okay, well, I want to take on one of these next ones that I get. I want to fix it up and I want to kind of make that bigger margin, at least in theory, right? And so usually you should start with a surfaces type rehab. You're not moving walls. You're just replacing doors, trim, maybe new cabinets, countertops, appliances. Maybe it needs a roof, maybe it doesn't. You're probably not doing windows, some new flooring. You redo the bathrooms, but you're not shifting anything around. You're not adding square footage. You're not adding beds and baths. You're keeping it really simple so you can kind of get in and out. And that's usually the first place people start. Also because it's less capital intensive that way, right? Like you're just doing surfaces for the most part. So you don't have a lot of expenditure beyond your acquisition. I mean, you can, but as far as how you're financing it, what kind of cash do you have on hand to kind of cover the delta between what your hard money lender will give you and what you're going to need to get it done. And so they get through that and they're like, okay, that worked. And then they do a little bit more. And then maybe they do one where they add another bathroom, right? Or they add another bedroom or they finish a basement and they just kind of continue to grow, not only in terms of their capital base or their lender base so that they can kind of take on these projects that last longer and take more construction and all that. But then they also just understand which houses you should do them in, which neighborhoods you should do them in, right? Because that's a big thing. Over rehabbing happens all the time, or people that try and make the Taj Mahal in a marginal neighborhood, or my favorite is people that do big rehabs on busy roads. That is just the stupidest thing ever. And I've always said busy road properties are the indicator of the market taking a shit or going to the moon. Because if somebody puts a busy road property on the market and you see it's on the market and it's on the market, it's on the market, it's on the market, that means, the market is probably either slowing or it's slowed and it's not so great. The only time people quickly buy houses that are on busy roads is when they've lost their damn minds because the market's so hot that they've got FOMO and they just want to buy a house. And that's the cheapest one in the neighborhood by a few percentage points. And so they buy that one, which nobody wants to live on a busy road, right? So anyway, you just start learning these things, and then you grow not only price wise, but you grow in terms of scale of construction, right? So scale of construction starts with surfaces, and it turns into maybe adding bedrooms and bathrooms, shed dormer upstairs, finishing a basement. And then eventually there's this big gap there from there to new construction, which most people never jump because it's scary, because it's like, oh shit, we got to start from scratch. We got to put in a foundation. We got to make these plans. I don't have an architect. I don't have an engineer. I don't know the process. I'm not a contractor. There's all that. And so most people end up stopping kind of at that line. Whereas, I decided to just kind of become the contractor. And when we jumped, honestly, it wasn't like I planned it at the moment that I did it. And I don't know if many people ever do really, but we bought a house in a house in Southeast Portland where the floors were like bowing. It was almost like a rainbow. And so you'd walk in it and like you'd be going downhill some parts, uphill other parts. And it had a basement and whatnot. I was like, why is it doing that? Level. Yeah, very bizarre, but keep Portland weird, right? So anyway, it turns out that there was what they call blue clay in some areas of Portland. And so the foundation had actually sunk on both sides. And so it kind of bowed the house in the middle. And so we didn't have a choice. We actually had to tear it down. I bought it at a, we're going to rehab it price. And we ended up having to tear it down and build a new house there. And fortunately, it worked out. But that was like, we went up to the edge and we kind of looked and somebody kicked me right in the ass and I had to jump into new construction.
Baptism by fire, yeah.
Yeah. So that's kind of the progression. But if you go through that entire progression, like you start to understand all the things about your market that can hedge your risk if you're going up in price point, or if you're going to do a longer project, or if you're going to try and set a new high price point in an area that maybe hasn't seen that price before. You just kind of start to understand these things. And that's where the value that a lot of people don't see is. Now, zoning is another thing, of course. But, I think, that's been a little bit more played out these days, because if you understand your zoning, or at least you have buyers that are looking for like, I want to be able to build at least a fourplex on this, infill 5,000 square foot lot, or 18 cottages that you can build on those in Seattle, right? I think you can, it's something like that for it's pretty ridiculous. But either way, like that's another place where, you can extract more value than what meets the eye. So there's just a lot, real estate's a dynamic asset, and especially with zoning and gentrification and areas improving. And which is why I love it so much too, right? It's not just so black and white, like they make it out on the internet.
Yeah, I think the ultimate resolution of today's episode, I think, is tied to that last story you gave of buying that house in Southeast Portland that you're kind of forced to tear down and build. Well, one, I think a lot of investors, when you don't know your market and you're in 3 different markets and you don't spend time meeting people who know what they're doing and slowly increasing your capacity for construction and deal finding and everything else, you probably end up giving that house back to the lender. If you guys you let the hard money company foreclose on you, whatever it may. A lot of people just do that when they get in that spot because they don't want to go through. They don't understand anything well enough to feel like they can make that leap. But I think most of this business is slowly, brutally increasing your capacity to do. You're just a little better at construction than you were the previous project. You're just a little better at sales than you were last year. You're just a little better at marketing. You're a little better at developing, clipping, whatever it is. And eventually you get to a point where you feel you're put in a spot where you have to make a leap, but some part of you feels comfortable enough to make that leap deep down because you've slowly increased it. The guys that I know that go from, hey, I just flipped a single family house and now I'm going to raise syndication, build a fund and go out and flip 22 unit, this is a real story, multifamily buildings in Phoenix. I know a guy that did that and it did not end up well. And so there's nothing wrong with slowly increasing capacity, and there's no trophy that you get for trying to go balls to the wall right away and take over the world in 1 year. So I think that's a good resolution on today's show. You guys, Tucker, thanks for all of that. That was awesome. I know I learned a lot there. You guys know where you listen to us, Apple Podcasts, Spotify. Give us a review, a like, reach out if you have any ideas for the show. A few of you guys DM me every single week. It helps me conceptualize how to best bring content that helps you guys. Again, our goal is to help you guys become professional investors, professional real estate entrepreneurs, and get out of the hustler, pond skimming, be here for 2 years, then gone mentality a lot of people live in. So until next time, you guys, you're only one deal away.